We are delighted to be joined by Steve Schwarzman, of course, of Blackstone. Steve, thank you. You were just on stage with the Prime Minister, Rishi Sunak. How much are you putting in the UK? What are you most excited about when it comes to UK growth?
Well, we've been putting a lot of money into the UK. First of all, we're doing our headquarters building here, which is a very significant size building. It'll be the largest built in the Mayfair area in the last several decades. We bought two companies in the last 2 weeks in the United States, in the UK, and we have a total of 70 billion pounds. That's close to $90 billion of investments in the UK, with 37,000 people working in these companies in real estate.
But Steve, what stands out as the biggest strength actually for the UK? Because there are many questions. There was an autumn statement. We're not sure how they're going to fund some of the tax cuts if they continue down the road. And we don't know if the Conservatives are in power in 12 months.
Well, the big advantages of the UK are the English language, the rule of law. They have a terrific university system. They have great life science areas. They're the number one tourist area in Europe, which actually I found surprising. And so they have a lot of pockets of strength. They've been through a complex time politically, but if you look longer term, the rule of law in the UK is very strong. Their regulatory posture has been quite consistent over time. But we forget that these are good things, and not all places in the world have them. And so I think I'm not an expert on UK, sort of laws in the sense of what they're doing politically. I think their autumn statement on balance, which was stimulative, is a good and necessary thing for their economy. And they have a much more open approach to immigration at the top levels of education, which is good for helping to power an economy. So I think there's some interesting things going on here.
Steve, what can you tell us about private market valuations at PE firms? So in general, do you see LPs actually demanding more information on marks and more, reporting requirements on valuation? Is that something that's shifting?
I don't see a big set of enormous concerns on that. What always happens at this stage in the cycle, when you go to very high interest rates and the world sort of starts slowing down, is that deals slow down. So for LPs, their biggest concern is they're not getting capital flows back that they normally were depending on, because people aren't selling assets. These type of cycles always end and things return to normal. It's quite interesting that we just did two deals in the UK in the last 2 weeks, one in the affordable and what they call social housing area, one in computer software. Both are billion dollar, $2 billion type deals. We're doing a number of things in the U.S. now, some of which have been announced, some of which haven't. We just were involved with a situation in Norway that's $12 billion. So the deal business is not totally in mothballs, and these things start again. And I think we're more on that side of the cycle, although it has been somewhat dreary for a year.
So in terms, for example, of real estate, I think you're raising an opportunistic fund. $10 billion? How's that going?
Well, we're raising money for a European fund. Actually, we're always raising money for a lot of funds, Francine. And, we've gone through a big fundraising cycle. So we have over $200 billion. It's one of the biggest pools of uninvested capital in the world. And and that will be deployed in due course. Interestingly, in real estate, which you just asked about, we're seeing a good deal of volume buying things in Europe because European real estate is under pressure in large part because interest rates were so low here for so long. Sometimes in countries they were negative. So the borrowing costs to own real estate were next to nothing. And now it's closer to 6%. So if you have to carry a whole portfolio that used to cost you next to nothing at 6%, they need to sell things. You know, it's necessary to just hold their other properties. And so we're seeing some very, very good buys in that kind of environment because unlike most people, we have enormous capital and can buy the types of real estate that we like, whether they're data centers, whether they're warehouses, whether they're student housing, where those sectors have done very well.
Steve, what can you tell us about rates? So have you seen any redemptions in that? How's that going?
Rates?
Breit. How do you say? B-R-E-I-T. You say B-REIT.
Yeah. Well, those redemptions have gone down. You know, they're, I think, 40% or something like that of what they were a year ago. And so that pool of capital is actually doing quite well compared to almost all other real estate. And so, you know, we look forward to that sort of ultimately going back to a very normal kind of world.
Overall, does UK politics seem benign compared to the US, but also what we saw in the Netherlands?
Well, you know, commenting on politics of other countries, let alone our own, which has a sense of drama and you know, sort of incredulity, is outside of my remit.
Fair. Steve Schwarzman, thank you so much.